Good morning, welcome to this update on Friday the 2nd of September, brought to you by Phoenix Blue. I'm Tom Colley and I'll talk to you about the news in the markets this morning. And the first thing to mention, as I'm sure you're all aware, is today is non-farm payroll day. So we'll go and have a look at that through the charts in a moment. But let's look at the news we had from yesterday. And here we had a big impact news on the pound. We had manufacturing PMI coming in at 53.3 versus a forecast of 49.1. I'm led to believe that's the biggest single month increase in 25 years. And is a reflection of what we're seeing is some very positive data coming out of the post-Brexit scenario. We'll have a look at the pound chart specifically in a moment in that respect. Over in the States, we had unemployment claims coming in at 263,000 against 265, so ostensibly bang on forecast and within a very tight range of what was the previous month there. Then a bit of a shock. We had the ISM manufacturing PMI come in at 49.4 against a forecast of 52 and a previous month of 52.6. Now that's the first downtick on that data for 6 months, and that's the biggest contraction in manufacturing PMI for nearly 2 years. So that's really significant. We saw that play out with the dollar yesterday afternoon. Okay, going into today, more data on the pound, construction PMI, possibly not quite as significant as yesterday's manufacturing PMI data, but also will be interesting to see if this continues the positive trend that we've had over the last few weeks. Trade balance out of Canada at 130, and then we've got non-farm at 130 from the States. Obviously, we'll also have the unemployment rate and one that we like to watch as well, which is the average hourly earnings. Now, non-farm, August, for the last 5 years, the August data has failed to hit its forecast, so it's come in lower. Adding to that, the negative ISM manufacturing data we had yesterday, and there's definitely been a pullback from the bullish nature on this. I think expectations were high on good figures. I must admit personally I'm slightly favouring figures coming in under target based on those two facts, the manufacturing figure there and also the historical record on August non-farms, but that's just my own opinion. That if the shortfall is limited and average earnings do okay, then we might offset that and still see some bullishness in the dollar. Obviously, we've got unemployment rate as well. Let's have a look at the US dollar index itself. Well, yesterday, or the day before yesterday, which was the last time I did a video, we were talking about this triangle formation. We're talking about $96 through here, through the apex of the triangle being the point of control, and we had been sat there at that level through the close on Tuesday, Wednesday, but yesterday this substantial move down came mid-afternoon, tying in with that negative manufacturing data. So now we're potentially slightly more biased to the downside on this based on that particular chart. Obviously we'll be waiting for the data to come out, and we're looking for some move to break either above or below these two levels here to give us clear indication of what's going to happen going forward. Over on the yen, when we saw a nice push up from the yen, it broke a level slightly lower than this through here yesterday, but then when that negative data came back in on the US dollar, we got some yen strength back in the market, and that pulled back, giving us a high test bar for yesterday. If we get some really strong numbers on non-farm, this is one market that I might look to trade following the figures, be looking for a break and some sort of pullback into that area to take that market long. Or potentially, if the data is particularly strong, a breakout trade, which isn't really one that we tend to do. But if the data is strong, there is potential for that there. This is the euro, where we had a pullback on the euro yesterday based on that negative dollar data. We are actually in a trade from this level here. This is one of the things which was on our watch list from the weekend. So we short this market here. In an ideal world, we'd like to get our stops at break even going into non-farm payroll. If that doesn't happen, we make a decision. Do we take a small loss and take the risk off the table, or do we leave the risk on the table, or do we do something, say take half the risk off? But we have to make a decision ahead of that non-farm data, because the volatility there will potentially, although we may even be in the right direction, the volatility can quite easily take you out, particularly when you're using 40 pip stop losses that we are in this market at the moment. Okay, over on the pound. Well, I mentioned we'd had some really quite good data recently. This is through the middle of August, and we can see we've got 3 items of good data there, and just only the average earnings coming in below expectation or below forecast, and then only 1 point below. We've got CPI, claimant count, and retail sales. Particularly the retail sales were really positive as a post-Brexit number. We had that data out yesterday on manufacturing, which was really, as I said, 25 years, or the biggest single step up in manufacturing for 25 years, undoubtedly driven by the lower value of the pound. Bear in mind this is a 4-hour chart, and the reason I'm using the 4-hour chart is post-Brexit almost there's a drop so substantial that anything above that is currently not relevant, but the reality is that price pre-Brexit is sort of right up here. So we had this significant step down, I believe in the region of an 8% reduction in value on the pound. That's made exporting from this country, from the UK, much more competitive, and that appears to be driving through that manufacturing production. We've got more data, as we set out today, so we'll keep our eye on that, obviously. And this is the New Zealand dollar. Now, the reason I've got it showing this is because this appears to be the strongest currency against the dollar at this moment in time. Over the last few weeks, it's been bound by a very tight range, or relatively tight range here, whilst the dollar has been moving a lot more significantly. Suggests that there is strength in this market ahead of, shall we say, other markets. And with that in mind, we have been looking at a trade, and I'm actually in a trade on New Zealand Canadian dollar short. This has now, we were already in at this point here. This is a weekly chart. This has now become more tied in with non-farm payroll, so we'll be looking to either hopefully get price to pull back and get a stop at break even, because unless we don't get dollar strength, then we're at risk of being stopped out on this. So as I said on one of the previous trades, we need to make a decision on exactly what we do that. But yesterday's pullback on the dollar following that weak data leaves us in a position that we weren't expecting to be in at this moment in time. That's trading. We have to deal with it. And as I say, if the chart was looking like this at lunchtime today, my preference would be to close the trade at a small loss rather than risk simply being stopped out, if only by volatility. Crude, the market that's been moving substantially, particularly the last 2 days, 2 big moves down there. As you can see, I've got an indicator in there, an alert. I was watching 46.60 sort of level. Fortunately, it didn't come into that level quite. The move was that strong, it just went straight off. Disappointing. That would have been a lovely move to take. We will be looking for a pullback into this 440 level with a potential to take that to the short side. Again, that's probably looking into next week now, avoiding non-farm this afternoon. Over on the S&P, the negative manufacturing data, we had a pullback down to this level here, which you can see is really quite a nice level through here. A lot of tips and closers through there. We've got this trend line through here. We will be looking for a break and retest of that level to trade down to this sort of level here, which is the 2015 highs, which were previous all-time highs. Any break below that, and then we see potentially serious downside, right down to these levels here, potentially. but we'll be looking for the opportunity to trade between these two levels in the first instance. Okay guys, so non-farm today, have your plan ready, take trades off the table, reduce your risks, know where you are before that data comes. That's true on every occasion. I think yesterday's data probably made it a little bit more uncertain than a lot of people were potentially expecting. Now, if you like the way that we trade here at Phoenix Blue, if you like the cleared charts without indicators, the fact we use fundamentals, and we do use commitment of traders analysis as well, and seasonal analysis, and we've got our next free trading event in London on the 23rd of September. If you would like to come on that, I believe that's a Friday the 23rd of September. The website is just about to be updated in that with that data in the events section. But if you want to book or just inquire, go straight to the contact section, send us an email, and we'll respond to you today with an invite and the details for this event. Okay guys, so that's the end of another week from the morning update perspective. Non-farm today. Be cautious out there. Protect your capital first, and have a safe day. Okay, take care, and we'll speak to you next week. Goodbye.